Hey everyone, and welcome back for another deep dive. Today we'll be exploring the world of money market funds in Kenya.
Okay.
You know, when you're thinking about where to put your savings, these MMFs, they always seem to be right there, don't they?
Yeah, they do. They really do.
Yeah. We got a fantastic report from Citon, a Kenyan investment firm, and it's called Investing in Money Market Funds.
Right.
And they give us all the essential information we need to know about MMFs. So by the time we're done with this deep dive, you'll be able to figure out for yourself if an MMF is something you want to include in your own portfolio.
Okay, sounds good.
So, first things first, what exactly is a money market fund?
Well, it's actually fairly straightforward. Imagine a big pool of money from investors like you and me, all of us wanting to safely grow our savings.
Right.
Well, that pool of money, that's basically what a money market fund is. Now, instead of us having to go out there and pick and choose individual investments, professional fund managers take all that pooled money and invest it in things like treasury bills or bonds or commercial paper.
Okay, so that makes sense, but why would I choose an MMF instead of just putting my money in a regular savings account? I mean, those are pretty safe, right?
Oh, definitely. They're safe. Savings accounts definitely have their place, but
Right.
but they tend to give you pretty low returns, especially when you compare them to inflation.
Right.
See, that's the great thing about MMS. Because they invest in such a diverse mix of those short-term debt securities,
Mhm.
they actually can get higher returns, potentially. And the other good thing about MMFs is that because all those securities they invest in mature fairly quickly,
Right.
that means that you can get to your money really fast if you need to.
That's really interesting because safe and high returns, they don't usually go together in my mind.
Okay.
So how do they manage that balance? How do they balance safe and high returns inside an MMF?
Well, it's all about strategy. It's about the types of investments that they pick. For example, treasury bills, everyone thinks those are super safe because they're backed by the government,
Yeah.
but they might give slightly lower returns than, say, commercial paper.
Okay, wait a minute. Hold on. Remind me what commercial people is again.
Yeah, good point.
What is that?
We'll just think of it as like a short-term IOU
Okay.
issued by a really big company.
Hmm.
They're essentially borrowing money from, investors like you and me for a very short period, usually just a few months.
So it's like they're getting a small loan from the MMF.
That's a great way to put it, yeah.
And then because these loans are so short term, that's what makes MMFs more liquid,
Exactly.
as opposed to like locking up your money in, say, a 5-year bond or something like that.
That's exactly right, yeah. It's that constant flow of maturing investments that gives you that access to your money very quickly if you need it.
Okay, so I'm starting to see how these MMFs can be appealing, but let's get back to these fund managers for a second. How much control do they really have?
Oh, they play a really important role.
Oh.
They're the ones that are doing the research, selecting the investments, and they're constantly having to adjust that mix of investments inside the MMF.
Right.
And their goal is to strike that balance between getting the maximum return while at the same time minimizing risk. And it really
Yeah.
is a lot more than just picking stocks. It involves understanding market trends, how interest rates move, and a whole lot of other analysis.
Oh, wow. So that sounds pretty complex. What's stopping them from just taking all the money and running?
That's a great question, and that's where the entire ecosystem that surrounds an MMF really comes in. It's been designed to protect your investment
Okay.
and also ensure transparency. You know how they're required to put out all those reports?
Yeah.
Well, that's just one of the layers of protection.
Okay, so walk me through that. Who else is involved besides the fund managers?
Well, you've got something called a custodian,
Okay.
and they're the ones that actually hold all of the MMF assets. You can think of them as like a separate, really high security vault
Gotcha.
that's completely independent of the fund manager.
Okay.
And then you've also got trustees, and their only job is to look out for you as the investor. They have a legal obligation to make sure everything is running smoothly, that it's operating just as it should be.
So it's like a system of checks and balances.
Yeah, exactly. It is.
That does make me feel a little bit better about the whole thing.
Yeah, it should. And then there's also an auditor on top of that.
Oh, wow.
And they come in as an independent party, and they verify all the financials. They're making sure that everything adds up and that there's nothing shady going on.
Okay, so there are a lot of safeguards in place. I'm glad to hear that.
Yeah, you should be.
But I am still kind of curious about these returns. You said that they could be better than a savings account. But how much better are we actually talking?
Well, according to the Citon report, most of the money market funds here in Kenya, they're currently offering returns between 7%
Okay.
and 10.6%.
Well,
And when you compare that to the fact that inflation is about 6.5% right now.
Wait, so that means with an MMF, you can actually beat inflation and your money could grow in real terms.
That's exactly right.
Wow, that's pretty impressive, especially compared to what most banks are offering these days.
Yeah, it really is. And that's actually one of the key things that makes MMFs so attractive. They give you a way to potentially grow your savings faster than you could with those more traditional options,
Okay.
while at the same time keeping things relatively low risk. But of course, past performance isn't a guarantee of future returns.
Yeah, of course. That makes sense.
And that's something we always need to keep in mind.
Okay, so if I'm understanding you correctly, MMFs can help you potentially beat inflation, and they offer you that quick access to your money if you need it.
That's a great way to sum it up.
Yeah.
Yeah, it's all about finding that sweet spot between safety, liquidity, and the potential for growth.
All right, I'm definitely intrigued, but before I go rushing off and investing all of my shillings in an MMF, what else should I know about why someone would choose a money market fund?
Sure.
What are some other advantages?
Well, okay, aside from everything we've already talked about,
Okay.
MMFs have a couple of other things going for them. For one thing, they're generally very accessible.
Okay.
You know, you don't have to have like a massive amount of money to get started.
Right.
Many of them have minimum investments as low as 1,000 shillings.
Well, that's good to know.
Okay.
I mean, that makes them a lot less intimidating than I originally thought.
Right. Exactly. And another advantage is that they have very low costs
Okay.
because money market funds pool money from so many different investors.
Right.
That means they can negotiate lower fees on things like trading and management.
Gotcha.
So a bigger portion of the returns actually stays with you in your pocket.
Well, that's always a good thing.
It is. It is.
So you're getting professional management, you've got diversification, and you have the potential for higher returns, all at a lower cost than if you were managing those investments yourself.
Yeah. Wow. That's exactly right. And let's not forget about the peace of mind that comes with regulation. You see, here in Kenya, money market funds are overseen by the Capital Markets Authority, the CMA.
Right.
And they have very strict rules to protect investors
Okay.
and to make sure everything is operating as it should be.
So it's not just like a free-for-all out there.
Yep.
Someone's actually making sure that these funds are playing by the rules.
Exactly. Exactly. The CMA actually monitors things like the types of investments that are allowed to be in the MMF
Oh, wow.
and the reporting requirements and just the overall transparency of the funds.
So it sounds like a very tightly controlled system.
It is.
Okay, that makes sense. So let's say I'm actually convinced, I've done my research, and I'm ready to put my money into a money market fund. How do we choose the right one for me?
Right.
There must be a ton of options out there.
You're right. You're absolutely right. There are a lot of different money market funds here in Kenya, and each one has its own unique investment style and its own track record. But don't worry, it's really not as overwhelming as it might seem at first.
Okay, that's good.
In fact, this Site and Report actually gives us a very useful framework for making that decision.
All right. I'm all ears. So what are the key things I should be looking for when I'm trying to pick an MMF?
Okay, well, the first and most important thing is to look at its past performance. Now, remember, past performance isn't a guarantee of future success.
Right, of course.
But it can give you a pretty good idea of how well the fund has been managed
Right.
and the types of returns that it has produced in the past. You can usually find this information in the newspapers or on the fund manager's website.
So it's kind of like checking the record of a racehorse before you decide to place a bet on it.
Yeah, that's a great way to put it. Yeah. You want to see a history of consistent wins, right?
That's right, exactly.
Exactly. Look for that consistency, for those stable returns over time.
Okay.
That's a good indication that it's a well-managed fund that can navigate all those different market conditions effectively.
Okay, but what happens if the market takes a dip?
Yeah.
I mean, sure, these returns can't always be positive.
That's a good point. You're right to be cautious about that. No investment is completely risk-free, but remember, money market funds invest in those low-risk, short-term debt securities.
Right.
So they're actually designed to kind of weather those market fluctuations a little bit better than stocks or long-term bonds would. But it's still a good idea to check how the fund actually performed during those past periods of volatility.
Okay.
Did they manage to keep their losses down?
Right.
Were they able to bounce back quickly?
Okay, so you're saying the consistency is key,
Definitely.
even when times get tough?
Yeah.
Is there anything else I should be thinking about?
Oh, yeah, for sure. Think about that minimum investment amount.
Okay.
Does it fit comfortably in your budget?
Right.
You definitely don't want to overstretch yourself just to get into a particular fund.
Right. It's got to be a realistic number.
Yeah.
That I can actually handle.
Mm.
What about those fees that we were talking about earlier?
Mm-hmm.
Is there a way to compare those across all the different funds?
That's a good question. You're going to want to look for something called an expense ratio,
Okay.
and it's just a percentage that shows the annual cost of managing the fund.
Okay.
Generally, lower is better because that means more of your returns stay with you.
So it's kind of like comparing the price tags at different bakeries.
Yeah, exactly.
You want to get the best value for your shillings, right?
Exactly. You got it. You want a fund that gives you good returns, but at the same time keeps those costs down.
Okay.
And, don't be afraid to really dig a little deeper.
Okay.
Check out the fund manager's investment philosophy.
Right.
Do they prioritize capital preservation? Are they actively managing the portfolio, or are they more passive about it?
Wow. That's getting into some pretty detailed stuff, isn't it?
It is.
Is there a way to make all this research a little bit easier? Maybe some resources or tools that you recommend?
Oh, yeah, for sure. There are lots of financial websites and platforms that have tools to help you compare all these different money market funds side by side. You can filter by things like past performance, expense ratio, and minimum investment.
Oh, that's awesome.
And of course, talking to a financial advisor can be really helpful,
Right.
especially if you want some more personalized guidance.
Okay, so it sounds like there's a lot of help out there if I need it.
Definitely, definitely.
So it's like having a financial GPS to help me navigate through all the MMFs that are out there.
That's a great way to put it.
So just to sum everything up,
Yeah.
we're looking for consistent returns, a minimum investment that I can actually manage, low fees, and a fund manager whose philosophy matches up with how much risk I'm willing to take.
Yeah.
Is that about right?
You got it. That's it. And
Well-
remember, it's all about finding the money market fund that fits you best, your own individual goals and circumstances. There's no single solution that works for everyone.
Yeah, that's starting to become clear to me now. It's not just about going for the absolute highest returns.
Right.
It's about finding a fund that matches my needs and my risk appetite.
You got it.
So we've covered a lot of information here today. What would you say is the big takeaway for our listeners who are considering adding an MMF to their portfolio?
Well, I would say,
I mean, based on what we've learned from this report from Citon,
Yeah.
it seems like money market funds offer a pretty compelling set of benefits,
they do.
especially for someone who's looking for that balance between safety, liquidity, and growth potential.
Mm.
But as you've mentioned, it's not about jumping into any MMF.
Oh, definitely not. No.
You've got to do your research.
Yeah, you do. You really need to understand.
You've got to pick the right one.
You do.
So how do I figure out where they fit? It still feels kind of, I don't know,
Mm-hmm.
abstract to me.
It's about, being really clear on your financial goals. What is it that you're saving for? Is it a down payment on a house? Is it a comfortable retirement? Or is it just having that rainy day fund available?
Right.
Once you know what you're aiming for, you can start to see how different investment options might help you get there.
Okay, so let me see if I've got this right. So if I'm saving for a short-term goal, like let's say a vacation I want to take next year, an MMF might be a good option for me because I can access my money really fast if I need to.
Right.
But if I'm thinking more long-term, like retirement,
Mm.
then I might want to look into other options that could give me higher returns,
Uh-huh.
even if it means taking on a little bit more risk.
That's exactly right. Yeah.
Am I on the right track here?
You are. You are. It's all about aligning your investment choices with your time horizon and your own personal tolerance for risk.
Okay, this is making a lot more sense now. It's not just about chasing the returns. It's about matching my investments with my needs and my goals.
Absolutely. And that's why doing your research and really understanding how all these different investment options work is so important.
Well, I feel like I've learned a ton today. Thanks to Citon's report, we've really been able to kind of take the mystery out of money market funds.
It's been a pleasure.
And understand how they actually work.
It really has. It's been great talking to you. And remember, when it comes to making smart financial decisions, knowledge is power.
So to all of our listeners out there, if you think money market funds might be something you're interested in, we really encourage you to do your own research.
Mm-hmm.
Explore a little further. I mean, there's a ton of information out there.
There is.
And with a little bit of effort, you can definitely find the perfect money market fund to help you reach your financial goals.
That's right. And remember, the best time to start investing is always today.
Right.
So what are you waiting for? Happy investing.
Yeah.
Well, aside from everything we've already talked about, MMFs actually have a few more things going for them.
Oh, really?
Yeah. Like, for starters, they're generally very accessible.
Yeah.
You know, you don't need a huge chunk of money to get started.
Right.
Lots of funds have minimum investment requirements that are really low.
Oh, wow. How low are we talking?
Like as low as 1,000 shillings.
1,000 shillings, really?
Yeah.
That's good to know. I mean, that definitely makes them seem a lot less intimidating than I originally thought.
Exactly. And another advantage is the low cost.
Okay.
Because MMFs pool money from so many investors.
Right.
They can negotiate lower fees for things like trading and management.
Gotcha.
That means a larger portion of your returns actually stays in your pocket.
That's always a plus. So you're getting professional management, diversification, and potentially higher returns, all at a lower cost than if you were managing it all yourself.
That's right. Exactly. And we can't forget about the peace of mind that comes with regulation.
Oh, yeah.
In Kenya, MMFs are overseen by the Capital Markets Authority.
Right, the CMA.
Right. The CMA, they have all these strict rules in place to protect investors. Okay.
And to make sure everything is above board.
So it's not like some kind of Wild West situation.
No, not at all.
Someone's actually making sure these funds are playing by the rules.
Yeah, definitely. The CMA monitors things like, the types of investments allowed in MMFs
Okay.
and the reporting requirements and just the overall transparency of the funds.
Okay, that makes sense. So let's say I'm convinced, I've done all my research, and I'm ready to dive into the world of MMFs. How do I actually go about choosing the right one?
Okay.
I mean, there must be tons of options out there.
You're absolutely right. There are a lot of different money market funds here in Kenya, and each one has its own investment style.
Right.
And its own track record. But don't worry, it's not as overwhelming as it seems. The Citon report actually gives us a really helpful framework for making that decision.
All right, so break it down for me. What are the key things I should be looking for when I'm trying to pick an MMF?
All right. First and foremost, look at past performance.
Now remember, past performance isn't a guarantee of future success.
Right.
But it can give you a sense of how well the fund has been managed.
Okay.
And what kind of returns it has generated. You can usually find this information in the newspapers or on the fund manager's website.
So it's kind of like checking the track record of a racehorse before you place a bet.
Yeah, exactly. Exactly. You want to see a history of wins, right?
Right.
Yeah. Yeah. Look for consistency, look for stable returns over time. That usually means it's a well-managed fund that can navigate the market effectively.
But what happens if the market takes a downturn? I mean, those returns can't always stay positive, can they?
That's a good point. You're right. No investment is completely risk-free. But remember, money market funds invest in those low-risk, short-term debt securities.
Right.
So they're actually designed to weather market fluctuations better than stocks or long-term bonds.
Okay.
But it's still important to check how the fund performed during past periods of volatility. Did they manage to limit their losses? Were they able to bounce back quickly?
That's a good point. So consistency, even when times are tough, is key. What else should I consider?
Well, definitely think about the minimum investment amount. Does it fit comfortably within your budget?
Yeah.
You don't want to stretch yourself too thin just to get into a particular fund.
Right. That makes sense. It's got to be a number that works for me and aligns with my goals. What about those fees we talked about earlier? How can I compare those across different funds?
Great question. Look for something called the expense ratio.
Okay.
It's a percentage that represents the annual cost of managing the fund. Lower is generally better because it means more of your returns stay with you.
So it's like comparing price tags at different bakeries, basically.
Yeah, exactly. You want the best value for your shilling, right?
That's right. You want a fund that's going to give you good returns, but keep those costs down. And should I be doing anything else? Should I be doing any more digging?
Yeah, don't be afraid to dig a little deeper. Check out the fund manager's investment philosophy. Do they prioritize capital preservation? Are they actively managing the portfolio, or are they taking a more passive approach?
That's getting into some pretty nuanced stuff.
Yeah.
Is there anything that could simplify all this research for me? Like, are there any resources or tools that you'd recommend?
Oh, yeah, definitely. There are lots of financial websites and platforms that offer tools that let you compare different MMFs side by side.
Okay.
You can filter by things like past performance, expense ratio, minimum investment, and of course, talking to a financial advisor can be really helpful if you want personalized guidance.
That's really good to know. So it sounds like I've got a lot of options to make this whole process easier.
Definitely.
It's like having a financial GPS to help me navigate the world of money market funds.
It is. That's a great way to put it.
So just to recap, we're looking for consistent returns, a manageable minimum investment, low fees, and a fund manager whose philosophy aligns with my own risk tolerance.
Exactly.
That sounds like a solid plan.
Yeah. And remember, it's all about finding the MMF that best fits your individual financial goals and circumstances. There's no one-size-fits-all solution.
Right, I'm starting to see that now.
Yeah.
It's not just about chasing those high returns.
Yeah.
It's about finding a fund that matches my needs and my risk appetite.
Yeah.
So we've covered a lot of ground today. What's the big takeaway for our listeners who are considering adding MMFs to their portfolio?
Yeah, I mean, based on everything we learned from Seiton's report, money market funds seem like they can offer a really good set of benefits, especially for people like me, who are looking for that balance
Yeah?
between safety, liquidity, and the potential for growth. But like you said, it's not just about jumping in.
Right.
You got to do your research. You got to find the right one for you.
You do.
So how do I do that? How do I figure out where MMFs would actually fit into my financial plan?
Okay.
It still feels a little, I don't know, abstract.
Yeah, it's about getting really clear on your financial goals.
Yeah, okay.
Like, what are you actually saving for?
Is it like a down payment for a house? Are you thinking long-term, saving for retirement? Or is it just about having some money tucked away for a rainy day?
Right.
Once you know what you're aiming for, then you can really start to figure out how all those different investment options can help you actually get there.
Okay, so let me see if I'm getting this. So if I'm saving for something in the short term, like let's say I want to go on vacation next year, an MMF might be a good idea because I can access the money really fast if I need to. But if I'm thinking long term, like way down the road for retirement,
Yeah.
then maybe I should look into other types of investments that could offer higher returns,
Right.
even if it means I might be taking on a bit more risk.
Am I on the right track here?
You are, yeah. It's all about making sure your investments match up with your time horizon
Okay.
and how much risk you're comfortable with.
Okay. That's making a lot more sense now. And it's not just about chasing the biggest returns. It's about finding investments that match my needs and what I'm comfortable with. Exactly. And that's why it's so important to do your research and understand how those different investment options actually work.
Well, I feel like I've learned so much today. And thanks to this report from Seiton, we've really been able to, make money market funds a lot less mysterious.
Yeah,
And we've really broken down how they actually work.
I agree. It's been great talking to you about this. And remember, when it comes to making good financial decisions, knowledge is key.
Yeah. So to all our listeners out there, if you're thinking that money market funds might be right for you, we encourage you to do your own research, explore a little further. There's a ton of information out there.
Tons.
And if you put in a little effort, you can definitely find the perfect money market fund to help you achieve those financial goals.
That's right. And the best time to start investing is always today.
That's right.
Happy investing.
Thanks for joining us for another deep dive, and we'll catch you next time.